Hi everyone, hope you're all doing well, and today we're going to talk about a stock that reported earnings last night, and I saw something that was frustrating and also quite disgusting. Like, the market manipulation that was going on this stock after it reported earnings was unbelievable. Obviously, with earnings, there's always that chance it goes up on earnings, down on earnings. It could have good earnings and it goes down. It has bad earnings and it goes up. But this was a purpose trying to dump a lot of shares off to try and get this stock to go down after earnings. So we're going to take a look at this. I'm going to talk about this, and also I'm going to dig into these earnings that came out from this stock that I own last night. So the stock that came out was with earnings was Corsair, and after these earnings came out, I actually went on the Discord, and what I always try and do is I try and look at the numbers before I even check the share price movements out. So I'm not kind of looking at the share price movements and kind of going, I see the share price go up and I think, oh, they're really good earnings, or I see it go down and I automatically think, well, these are probably bad earnings. I always try and look at earnings without looking at the share price, and I'll look at the earnings report and make my decision up before the earnings come out. And I had a look at the numbers originally, and I had a quick scan through them all, and I thought, oh, these are pretty good numbers. And I posted on the Discord. If you're on the Discord at the time, you probably know, I was like, oh, they're good numbers, these. The only little thing that I was a bit worried about on the Corsair side of it was the guidance. The guidance was okay, it was in line basically, but the actual numbers were a beat, and I thought these are pretty decent numbers. And I thought, okay, this is a good earnings report considering the valuation the stock's at, how beaten it is down going into earnings. These are good. And I looked at the market at the time, and I saw the market slowly, as you can see here, the little pop up in earnings after they came out, and everyone going, yeah, they're good earnings, like everyone appreciated it. And then what happened? Boom, the stock fell massively down. I think it was down like 12-13% at one point. There was just a massive dump after the earnings came out, taken positively. Boom, absolutely dump in the share price. And as the day's gone on, the share price has recovered some of that dip. It was actually only down a couple of percent as the day went on, close to the market open today. And even today, the stock is actually up. As recording this video, the stock is actually at 1.4%. And this is a big thing. This is really frustrating. This is someone or short sellers that are out there trying to control the stock to try and just keep it down. These are good numbers. We can't have this jumping in share price. Dump the shares off, get it to go down. And that's what happened. Good earnings came out, it went up, boom, dump the shares. Now, what has happened is people have clocked onto this and going, that should have gone down 10%. And people have been buying up this dip, and after them earnings, it is slightly up 1%. And in my opinion, those earnings were actually quite good, and I believe the stock should be up 5%. But it was very frustrating to see a company that reports good earnings and to see someone or a short seller trying to dump these shares off to keep the share price down lower. It is frustrating. And this is unfortunately part of the game that we have at the moment. If we look at the most shorted stocks that are out there right now, there's a list of the most shorted one. I mean, look at Beyond Meat, 36% short interest, Lemonade, 35% short interest, Tattoo Chef, 23%, Smile Direct Club, which is 31%, but we do get down to here, which is Corsair. Corsair is 30% short interest, which is a huge amount, a massive amount of short interest on that company. 10%'s a decent amount, 20% is quite a lot, but 30% is a huge amount of short interest on this company. And unfortunately, this is what short sellers, the extremes they will go to. We're already in a negative market, a bear market, a market that a lot of negativity is controlling at the moment. A lot that the short sellers are kind of winning on a lot of positions at the moment, and they're trying to keep these stocks going down. And it was frustrating to see that kind of happen in the share price. But hey, at some point, every dog has the day, and what will happen eventually is, at the moment, there's a lot of negativity out there. There's a lot of short sellers doing well at the moment, but when we have people now, that much negativity, and they're still trying to push the stock down lower, but people are starting to clock on now and starting to buy up the dip, kind of says a lot to me. And something that I would bear in mind is that what we've started to see in the last kind of 2 weeks is we are seeing this. It's not massive, but we are starting to see the little bounce starting to happen on a lot of these small market cap stocks. And there's a lot out there. The last kind of 1 week, 2 weeks, we're not going much lower at the moment. Now, I'm not saying that's, I'm not saying this is definitely it, 100%, this is the bottom, we aren't going any lower. But it is interesting to see these sort of reactions now of, okay, we've not made any new lows for a while, we are having a little bit of a bounce at the moment, short sellers are pulling all the stops out, trying to dump off shares to get the stocks to go lower, people aren't falling for it now, and I think generally we are looking at some point of view where we have at the moment, this company was, unless you was like in this stock basically when it IPO'd, since October time, if you bought since October time, you're down on this position. There's a lot of people that bought on this stock and are now down on the position. And I think what has happened now is we are having quite a few people that were in this stock starting to get flushed out of this stock right now. And I think we're getting to the point of view where you kind of get into a concrete base now where people go, yeah, I'm not going to paper hands. I'm pretty happy on this investment. I think it'll work out in the long term. I'm generally holding for the next 5 years. And if it was to go down to any more, I'd still hold it. If it went down to 15, I'll still hold it. But at this moment in time, it looks like everyone that's kind of around that kind of $18 mark is pretty much like, I'm pretty happy to hold my shares. And I think it's kind of shows the kind of where we're at in the market right now is that there's a lot of negativity out there. The shorts are controlling it. But there's just kind of that point where, is it kind of maxed out now? We're looking at a lot of stocks here, and Corsair, one of them, that we go, there's not much more, there's not much more we can actually go lower. We're kind of running out of people that are willing to sell now, and is that rotation happening? I don't know, for a while I have been saying that I don't think small caps could go too much lower. Personally, in my opinion, I just think there's so low now, so cheap valuations that I can't see them going too much lower. But that's something to shout out there. But it was also I thought I'd make that just saying that a bit how frustrating it was to kind of see that share price manipulation going on there after the reported earnings. Now, that was it on the Corsair side of it, and just really frustrating and a bit disgusting really to see that kind of moves trying to be put on Corsair. But getting on to the actual Corsair earnings, they were actually pretty good, like I said. They came with an EPS beat by 10 cents. Revenue was a beat by 13 million, which is great. And this is coming off back of a Q3, a company that's been really affected by the logistic issues out there. And I was this is one of the companies that I was really worried going, okay, they had a horrible Q3. Is this going to be okay for Q4? It was one that I was a little bit nervous on, and for them to come out with these numbers, I was like, that's good. That was pretty good going. Year-over-year growth was a little bit slower. That's obviously because they're coming off, very hard comparisons with logistic issues. So that's absolutely fine. But the big thing is this: people said this was going to be a, only benefit from the CV situation, but it's still even putting in, still very good numbers going forward. Guidance was the range that was expected as well, which was 1.9 billion to 2.1 billion. So that was absolutely amazing. And just the EBITDA, operating income was about in the range that we were expected as well. Now this company is now putting in quite decent valuation in my sort of opinion. It's 15 times trailing PE, 11 forward PE, price to sales under 1 as well for this company, and currently going into next year, it's going to grow at 4.7% and the year after 10%. So this is a big thing. I think if this company gets to where it's expecting to go long term and it does kind of go into that high single digit or double digit growth, for me, this company is a very good valuation now, and that's why I've kind of been buying it. Some little highlights here is that which going on to the conference call, we reported that revenues were 510 million. At the high end of our guidance, and overall that means they did grow, even though it was negative in Q4, they did grow 11.8% over 2020, which is pretty impressive. That's a year where they've benefited so much from the CV situation, and people said, oh, it's just a one-off year. Well, now it's entering two lucky years, I guess. They still put in fantastic growth, and 11.8%, that's really, really fantastic growth. Let's not forget that, even if this company does, next year does 4% and then 10%, this company's still putting high single digit growth, which is great. So overall, for a year where they've had a lot of logistic problems and going off really tough comparisons as well, to still be putting them sort of numbers in is really good. Gross profit came in at 121 million. Obviously there were some pressures with logistic issues there, which is really why the share price is down so much. Going back onto the conference call, throughout 2021 and continuing today, we continue to be in a challenging supply chain environment, and based on feedback from our customers, we believe the market for self-building gaming PCs continues to be constrained by the shortage of high-end performance graphic cards. So as well as the supply chain issues, they're also thinking they're losing a bit of revenue because people are not upgrading their their PCs, and when that kind of pent-up demand comes back, they also think they'll get a lot of benefit from there. So that's a big thing to kind of think about. A lot of these problems should sort themselves out towards the back end of 2022. They said they have also entered 3 large new markets: microphones and cameras for content creators. So this big thing is like, this isn't just a gaming PC kind of play now. You know, streaming's massive now. You know, loads of people do streaming or something with them sort of gadgets that are needed. And obviously some new ones here. You know, microphones, cameras, monitors for both content creators. Yeah, we also showed our internal goals of reaching 3.5 billion in revenue by 2026. So if you don't know, they did an investor presentation day. I think it was about 3 weeks ago. I think it might have been. Basically, they came out and said our goal is to, by the 2026, hit 3.5 billion in revenue. That's absolutely massive. In fact, I would even say that is, you know, quite ambitious targets to be meeting. So you're considering right now. Let's have a look what they're going to do. So in 2022, they're expecting 1.9 billion. So yeah, to get up to 3.5 billion is a massive target. I think that is something like around about 15% growth on a CAGR basis. So yeah, that is obviously, when we look here, when you go off the metrics of what they've grown up previously, which is 4 and 10%, they're expecting a massive amount of jump in revenue growth in like the years of 2023, 2024, 2025. And that's a big thing. If this company does get to kind of like double-digit revenue growth at this sort of valuation, and then you take out, okay, the logistic issues and the cost of them kind of calm down, or either they pass it on to the consumer, then this is going to be, you know, a really good company to making some good returns. So we'll see what happens there. I think that's quite an ambitious target. We'll see if they do it, but I like that they're ambitious, I guess. During 2021, we launched 141 new products, and we've increased our number of products lines to 30, which is great. And also there's one more bit in this conference call that I highlighted. So turning now to our outlook for the year. For 2022, we expect total revenue in the range of 1.9 billion to 2.1 billion, representing growth of approximately 0% to 10%. So that's quite a big area that they kind of giving there, 0% to 10%. Obviously 0% would be fine, but we still want to see the company ideally continue to grow. I know they've got a lot of logistic issues. I know there's a lot of, you know, hard comps to do off, you know, the COVID quarters and everything like that, but we'll see what happens there. I mean, obviously analysts at the moment are expecting 4%. I think they've given such a good range because there's so much that can change throughout the year. And also I think that they want to play it safe. I think that's the big thing, and that's why they're giving such a good range, and I think that's why they kept the guidance in line. So, I mean, you know, if it does come kind of, if they do put numbers in between that 5 to 10%, I'd be very happy. And obviously analysts are expecting that, so we'll see. You know, like I said just earlier, you know, if they do come in like 8, 9, 10% revenue growth, I think this company at this sort of valuation is really good. And then you also hopefully they keep up with that long-term growth as well. They adjusted operating income in the range of 195 million to 215 million, and EBITDA to be in the range of 205 million to 225 million for 2022. They did expect, they said, we are expecting an approximately 45% to 55% revenue split for the first half and second half. So obviously they're expecting a bit of a rebound in the second half of the year compared to the first half. As expected, hopefully that cycle of graphic cards helps, and also they're expecting hopefully these logistic issues to hopefully calm down a little bit. So they are kind of suggesting that the back end of the year will be better than the front end of the year, so we'll see what happens there. It was interesting to say though that this unlocking the pent-up demand because of the timing of the holiday period in 2021 and the Lunar New Year in 2022. We expect greater than average seasonal effects on Q1 revenue. Now that's important because these events have already happened, and obviously we were kind of like 1.5 months already into Q1. We're nearly halfway through Q1, so these guys have a good idea what Q1 is looking like. So the fact that they've come out already and said, look, the Q1 could be pretty good, and we expect greater than average seasonal effect on Q1 revenue. It looks like these guys are kind of hinting that Q1 revenue could look still pretty strong. We'll see what happens there. If I have a look here, I wonder if there's actually any analyst forecast on this. Let's have a look. Current quarter, March 2022. So they're actually expecting 472 million, and the year ago sales was 29 million. So they're actually expecting a 10% decline here. So we'll see what happens there. We'll see if that was a little hint of that. Okay, our Q1 could be actually okay. So some numbers just to keep an eye out on when we come 3 months further down the line. We'll see if they were dropping a couple of hints there. But yeah, overall, just wanted to make a video just kind of showing, the kind of extremes that some short sellers will go to with that market manipulation that was going on with the share price after earnings, and the shorts and everything like that. And a little bit of review into Corsair earnings, which I thought were pretty good. I was impressed with the conference calls, impressed with the earnings. The earnings were better than what I thought. I was happy with the guidance being in line. Better to play it safe, and the targets for the long term still look pretty good. Obviously if we can get back to high single, double digit potentially growth, that would be great. Hopefully the logistic issues calm down. That will obviously improve the gross margins. That will also mean more profit, and the profit as the revenue increases. And like I said, for the valuation it's at now, there's so much negativity priced at these sort of valuations that if these guys do hit them targets, then I can easily see this stock, in the long term, in the long term of things, I do expect this to get close to a $60 stock, and I will expect it to get there in the next kind of 2 to 5 years for sure. So that's what I look forward to Corsair. And at the moment, one of those that the share price is a little bit rocky, a lot of shorts that are putting a lot of pressure on the stock. But when you look at the long term, when you look at the inside of the company, how's the inside of the company doing? In my opinion, there was a few good things in that quarter that I was happy with and happy as a shareholder, and that's what I'm judging this investment off in the long term. And in the long term, I still believe that this company will do well, and I'll make money on this investment. So yeah, I hope you enjoyed that little bit of an update, guys. Something a little bit different today. I don't really normally do this sort of stuff on the main channel. The most time I actually review earnings is actually on the Patreon, really. So yeah, hope you enjoyed it, and I'll see you all in a bit.